Hello and welcome everybody to the Infinite Financial Freedom Podcast, where we empower you with financial literacy and guide you on your journey to financial freedom. I'm Josh Metal, and I'm here today with my friend Brian Grimes, founder of 24/7 Cash Flow University. Brian is a true real estate entrepreneur, which means we're naturally friends from minute one. And after graduating from Columbia University in 2011, Brian embarked on a career in financial planning, worked both at AXA Advisors and Bridgewater, which I believe is the firm that Ray Dalio founded. And we're going to get into that in just a minute. And since then, since going down the path of financial planning, he took a left-hand turn and he started his own real estate development company in Philadelphia and has gone on to buy, gut, and renovate over 300 rental properties across the country using the BRRRR strategy. Now, I live in Park City, Utah. So the BRRRR strategy around here is you take your Patagonia and you put a North coat over the top of it, and then you put your beanie on, and that's the BRRRR strategy. But I think Brian is going to educate us on a different kind of BRRRR strategy. So Brian, welcome to the show, man. Thanks for being here with me.
No, thanks for having me. I appreciate it.
I'm really excited to chat with you. I was telling you, before we got on that I was up at 4 o'clock this morning with my hot cup of coffee, my Park City coffee cup here. And I was reading back through your bio, your history, and I just got fired up for this call, man. So let's jump in. I'm stoked to spend some time with you. I'm really curious about your journey from Ivy League, Columbia University, to going down the path of financial services. I'd love to, just learn a little bit about your journey and what it was like to work at, do you say AXA or AXA?
Yeah, it's AXA. AXA.
Okay.
It's a French based company, but has branches all over the world, really. Yeah, I mean, it's definitely interesting. When you're at Columbia University, and I was an econ major, right? They're pretty much railroading everybody into investment banking at this time. It's like, oh, you're an econ, you want to be an iBanker. And I was always one to not look at the money, but look at the lifestyle, right? Everything was always about lifestyle for me because my parents were entrepreneurs. I loved their lifestyle and I wanted that. So I would look at, well, what are the partners doing in iBanking? How are they living? Are they spending time with their families? Do they look happy? These guys look stressed out. They're, they're on meds. They're just like freaked out, and they're working 20-hour days, even into their 50s. And I'm looking at that and saying, do I want that? Not the money, because a lot of us get caught on the money. Do I want that? And I didn't want that. What I wanted was to be my own boss, to kind of control my destiny, to not have a cap, but to also, I knew I wanted to get into real estate. So I wanted to have something that allowed me the free time to make my schedule so that I could build myself as well. So I got into financial planning, one, because nobody in my family knew anything about money. And I wanted to learn about wealth because I knew that would allow me to uplift others in my community and in my family. And I knew that it was something that I could do in a sales environment where I could control my own schedule, my own destiny.
I love it. You reminded me of a lesson one of my coaches, actually my first coach, taught me, which was, this was right after the mortgage meltdown. And I think this was probably 2010. And Bill told me, he said, all right, the business you spent the last 10 years building just imploded. It's gone. Get over it. And the only thing you should be thinking about right now is, what is it that you want to build going forward? But in other words, start building something with the intentionality of where you want to end up. And he would always tell me, on your terms, based on how much time you want for yourself, your family, your faith, your kids, your endeavors in life, and then build that business that will work alongside that. Don't allow the business to push everything else out and suffocate it. And that's exactly what you just said with, do I want that? Do I want to end up where those guys and gals are?
Yeah, absolutely. And another thing, I got some incredible mentors from Columbia. I'm wearing, for the Columbia people out there, I'm wearing my Columbia blue, which is like every other shirt is like this color. But I had some incredible mentors, right? Some former athletes. I'm a former basketball guy. I'm about 6'7". First high school game was against Lebron James. That's a funny story if we get into it. But I had some incredible mentors, right? And they gave me these principles, like almost everyone I can just name some, mind blowing or transformational principles. But one that my top real estate mentor gave me, he's like business partners with Magic Johnson, TD Jakes. He does big commercial deals all over the country. He talked about portable equity. And this is like when I'm in my early 20s. What does that mean? He said, well, you go work at a job and they're working you're building relationship, you're building, all these things and a reputation. But if you leave, you can't take it with you. And I'm like, whoa. He started talking about the licenses you can get. You can get your certified financial planner's credential. You can take that. That's portable equity. And if you're going to work somewhere, you always have to have portable equity. And I started to look at real estate also as portable equity. Wherever I was working, I stopped viewing the job as a job and I started viewing the employer as my partner. They were funding my real estate career and they were giving me the money to put in the properties that were going to be my portable equity should or when I leave. If you're like a millennial or a Gen Zer, I mean, you're working somewhere 1-2 years. So, and then you're usually jumping because we want immediate gratification and these things. So you have to think about portable equity no matter what you're doing. The question is not the reputation you're building here, but what you can take with you when you go, because it's really more of a when than if these days.
That's such a beautiful mental construct. I'm gonna borrow that, portable equity. I love that. And what I take away from that is I may be building the brand equity at a company, but I need to get something out of that more than dollars. A
Definitely.
paycheck that's taxed at the highest rate, right? I need to get out furthering my education, furthering my reputation, furthering my ability to grow and to do the next thing, whatever that is. Did I get that right? Or would you add anything to that?
No, it is that. And it's like what you were talking about. If you were building this one business and then it just went kaput, the market conditions changed, what skill sets did you get from going through that process that you can now apply? What are the portable skill sets that are going to stay with you, regardless of whatever the job is or whatever business that you built? It's more about what you get out of it and what you can retain and then apply to the next business, because, that makes you stronger. Just like you're saying, every job I worked at, I had that mentality of what skills can I get? And a lot of those skills that I picked up from working at startups, working at high net worth firms, managing money for millionaires, wherever I worked, I took things from it and I applied that to real estate, and it made me successful in real estate.
Almost like you take the mindset of I'm a franchise and I have to invest in my personal franchise, the Brian franchise, the Josh franchise, and I may be doing a job for you, but in the back of my mind, I'm building my own franchise it is portable that I can take with me to the next venture.
Definitely. I think what's weird about how we work today is if we go back like 100 years or maybe a little bit further, everything was kind of like an apprenticeship, right? If you wanted to be a shoemaker, you had to apprentice under a shoemaker. Yep. Now it's like you go work at this big corporation and you can work there and they'll teach you what you need to know, but it doesn't feel like this apprenticeship thing. When you have the apprentice mindset, no matter where you're at, you're there to learn from masters so that you can become a master, not just so you can continue to be in that role. So it's definitely taking that old school mindset shift. And I think when it comes to real estate investing in particular and being an investor, there's almost no school class you can go to. That is still one industry where you have to be an apprentice under a master. So it's kind of that antiquated industry where this still applies today, which is, I think, amazing.
School of Hard Knocks. I have a few of those real estate stories we could get into, Brian. But it's a lot better to be working an apprenticeship. I'll tell you what.
Absolutely. Absolutely.
All right. Well, we can't go on without hearing the LeBron James story. So let's do that, man. What happened in this game? Did you win?
I think we lost by like 10, but it was a nail biter. I mean, growing up in Philly, I was probably 6'4" at like 12, 13. nationally ranked, top 10 ranked at this time, going into high school. So I'm a freshman. The most people I played in front of was like 150 people. I've got 3 All-Americans on my team, seniors. One's 6'7", he's going to Duke. Well, 168, he's going to Duke. 167, he's going to University of Florida. And the other is 7 feet, and he's going to Vanderbilt. I mean, these guys are like just studs, right? So they fly us out to Akron University to play some guy named Lebron James. And YouTube's not really built out. Like, you can't even see video on this guy. I've got a 65-year-old coach who's like 5'2", 280. He's got a basketball. He's going baseline. If he gets here, he's just going to take off and tomahawk dunk on you. And we're looking at him like, nobody's doing that in high school. What are you talking about? We get down there out of a private jet. We're turning on the radio in the van. Germantown Academy's here. Brian Grimes, the freshman, the superstar freshman, and talking about these seniors and where they're going. And I'm like, wait, we're on the radio? Like, what is going on here? Sold out crowd. I think Akron University could hold 10,000, 12,000. There's 15 to 18,000 people there. Wow. And this guy is just incredible. I describe him, I mean, you can see how he can jump now at like 37, 38. I describe him as a 18-year-old as if you were standing next to him and he's running full sprint and you're running full sprint in high school, and you reach out to touch him, he's 2 paces ahead of you. He's that much faster and stronger than everybody. He could almost jump twice in the time it would take you to jump once, because you're loading up to jump. He's just bunny hopping, but his head's like at the rim. I mean, this guy was just light years ahead of people in all the skill sets. So it was an amazing experience. And I played a lot of other good people that year. I mean, it's really a national program, but some of those experiences definitely stick with you. I didn't know who he was before, but we knew who he was after that game for sure. and he's been incredible, ever since. Yeah.
What an incredible experience for you as a young man to be put on that kind of a stage and that kind of pressure to perform. I mean, I know I gained my, I guess what I'll call my grit, my tenacity, my willingness to dive into hard things from sports. I was a football guy, played a couple of years of college football. My name was never on the radio, just so everybody knows. I was never that good. But it is something that taught me not to fear failing and losing. It taught me that team mindset, that you're only as good as the worst person on the team. And it was a life lesson. So cool for you to experience that at such a young age, man.
No, yeah, it was definitely cool. And I agree with you. Sports is the microcosm for life. Yep. No matter what level you played at, it teaches you so much about business and real estate that it's incredible.
And how you're going to deal with failure,
Definitely.
If you want to be good at sports, you better get a growth mindset, because somebody's going to serve you sooner or later, and you're going to have to eat a big slice of humble pie and then figure out how you go back and work on your game.
Absolutely.
So Brian, tell me about the pivot, man. You pivoted from financial services, and you're talking about major financial services. I mean, you come out of Columbia. I could just imagine you're sitting there working at Bridgewater, and you're like, I don't want to do this anymore. I'm going to go do this real estate thing. So help me understand that a little bit more.
I think I call it being fiercely independent to a degree. It's the thing that happened to me is I really got bit by the independence bug on my first job. So when I'm working at, AXA, I'm 100% commission straight out of college. And that's a sink or swim environment. Yep. That's a 90% failure rate. So only 10% like, hey, I'm sitting here cold calling next to this guy, and then next week he's gone, Yep. And it's when you survive that gauntlet, you get what they call rhino skin. A rhino skin is 10 inches thick, and you can't penetrate it with a bullet. You start to become fearless because you survived this high failure, high intensity environment. And when I did that, I started to learn about the 2-month delay. So the 2-month delay is, if you put in as much energy as you can into commission sales, like today, you're going to go super hard. You're going to drive around. You're going to sell as much as you can. You're not going to see the fruit from that energy until 2 months from now. So you're building up a pipeline of activity and energy that you're getting paid off of. And as I went through that process, I started to believe in myself and my own energy. I started to understand, even if I was working at a job, what was really bringing in the money was the energy I'm putting into it today. And I trusted that if I put that energy into anything, that there was going to be some delay, but it was going to come back and pay me in full. So no matter what I was doing, I always had this fierce independence and more fearlessness than the average person, because I knew I could survive 100% commission, no salary anyway, as a 25-year-old with no connections, no relationships really. So I just wasn't ever afraid. It was harder for me to fully buy into the employee mindset and some of the constraints there. So I call it as I'm doing real estate and I'm used to being my own boss and I'm trying to be an employee, I'm going through what I call the Clark Kent Superman syndrome. Of I'm Superman by night, I'm my own boss by night and during my lunch break, and then I'm an employee by day. And eventually one of the egos just destroys the other, and it's usually the Superman ego that wins out. And once that happens, you know you have to become your own boss. You have to go all in on real estate. You have to bet on yourself.
Man, I think a lot about self-confidence and where that comes from. And when you were talking, it brought up this construct that I have around, where does legitimate self-confidence come from? Now, that's not the self-confidence that people show off by their watches. This is a $99 Apple Watch for anybody who isn't watching the video. It's not the kind of confidence that you get by driving a flashy car or a really nice suit. It's the kind of confidence that you get from showing up every day, putting in more work to the lady or the guy next to you, getting the results, and finally getting to that place where you're like, man, you could drop me anywhere and I can out hustle, I can out innovate, I can outwork, I can find who's successful in my environment. And I can go, okay, I know how to Josh that. I can take that little piece, I can make it mine. And I show up every day when other people are drunk after the game and hungover or whatever. And I believe that's where self-confidence really comes from. Would you add anything to that?
I would kind of reiterate it. And I love that you said I would Josh that, because there's a knowledge of self within that level of confidence that you know what Josh is, independent of applause, criticism, or anything else. You know that when you are put in pressure cookers, who you are and what you are capable of doing, and that you have a relentlessness. You're not afraid of failure because you failed before, you can't come back. Yep. And when you have that knowledge of self, I have a similar knowledge of, when I got put in the cold call environment, I went back to basketball. And I said, you know what got me on the court when I wasn't good was obsession and consistency, keeping what we call keeping the main thing the main thing. The main things that keep the main thing the main thing. Tunnel vision, staying locked in, picking up the phone and pounding that phone, period. Independent of results, criticism, people laughing, potential failure. And when you know that about yourself, you always bet on yourself. You never bet on an employer, some investment you might not understand. You just don't bet on those things. You bet on yourself because you trust yourself more than anything. And I think that you just hit the nail on the head. Once you get that level, financial freedom is inevitable. Once you get that level of understanding of self and what you're capable of.
So many golden nuggets in the first 20 minutes of this conversation, man. Thank you so much. I'm really having a good time here. All right, well, let's take a hardcore pivot and let's get into some discussion around real estate investing, which is really your genius zone. And so, right now, everybody's talking about inflation, and there's a lot of fear about both inflation and a pending potential recession. What the Federal Reserve is going to do, that's kind of a scary thing out there. So how do you think about inflation and a potential recession as it relates to your real estate investing? Good or bad time to be in the real estate game?
I think buy real estate and wait instead of wait to buy real estate is usually the best philosophy. So I believe, even though I've done, very well with the BRRRR strategy. I do believe in being strategy agnostic because I look at it like sports again. You're a football guy. You're not trying to sweep right into a blitz. You know what I mean? Like you want to react to the defense. And I believe if the defense is off you, you shoot the ball in basketball. And if they're all up on you, you drive around them. And I look at the market in the same way. So if rates are super low and pricing is correct, you want to get heavily into the BRRRR strategy. If rates start ticking up, but prices are also inflating as well, you might be able to do some buy and flip activity. If rates keep going up and inventory is going up, but there's market pain like we're seeing now, and we might be going into a recession, you might want to get more into the creative financing piece where you're doing subject to lease purchase options, sandwich lease options, land contracts. You might want to get more into the creative financing piece because that's going to allow you to go out and search for those juicy deals. What are the juicy deals? Well, when a 30-year mortgage is at 7.5%, maybe you find somebody in pre-foreclosure and you structure a subject to deal that allows you to take over their existing mortgage, their owner-occ mortgage that's at a 3.5% note or 3.2 or 2.5, something that you can't even get. So I believe that it's more about being strategy agnostic that will allow you to win in any environment. So it's more of a knowledge thing than what the market is doing at the moment. With that being said, the market, it's a big market, right? The United States, we look at it as like one thing, but it is really state specific. So if we look out on the West Coast, like Boise, Idaho is red hot. Tampa, Florida is leading the country. Some of these markets that are super overheated, they're going to have serious pullbacks. A lot of the Northeast is actually pretty prime. Like if I go in a C-class neighborhood of Baltimore, I mean, it's you really don't even need a mortgage to get some of these deals. You might buy a property for $30K, put 10 grand into it, and cash flow $1,200 a month with a Section 8 tenant. And you don't care about what the economy's doing, what the market's doing. So it's really about strategy. And for what I do, because I'm so low to the ground in terms of my strategy and the way that I build and acquire properties, this is not necessarily having a major impact on me. It's more of a short-term market fluctuation where I'll do just different strategies like creative financing.
I want to get into the BRRRR strategy, and I want to get into, I think I heard you say, you fly close to the ground. I want to dig into that and learn what you mean by that. But I want to net out really quickly what you said. Basically, what I think I heard you say is, I look for where there's a challenge or a problem in the market, and I find the solution to whatever that problem is. If it's low inventory, there's a different challenge than if there's high inventory. If there's low interest rates, there's a different problem than if there's high interest rates. I find I don't have just one tool in my toolbox. I find the problems, and then I use the appropriate tool to find the solution and bring value to the project.
That's correct. We need numerous tools. A lot of us, we fall in love with one strategy, and that's where you see people have massive success and then massive failure. Like, hey, we're flipping, and they're going to flip until the wheels fall off, but then eventually they fall off, and people are sitting on 10 flips that aren't going to sell, and they lose it all. They say it's not how good you're doing, it's how long you're doing good. And when you have more strategies available to you, you can do good for longer because you can pivot and adjust to the market versus be a victim of the market. So it's about just having more knowledge. And what I love about real estate, I'm sure you do too, Josh, is I feel like they say good musicians say they learn something new about their instrument like every day. They learn something new. Even if they're like 99, they're still learning. I feel like real estate is so broad that if you stick with it, you can just keep learning and learning and learning. And the more you learn, the more flexibility you have, the safer of an investor you are because you can pivot better. So that it's 100% right. I try to have more tools available so that I can pivot and adjust.
Brian, it's funny you said that. I was just listening to George Gammon's podcast. He has a great podcast called the Rebel Capitalist Podcast, and he was interviewing Robert Kiyosaki. And George was making an observation that at his most recent Rebel Capitalist event, he throws a biannual or quarterly Rebel Capitalist live event. And he observed that Kiyosaki was in the front row, center stage, 30 minutes before the presentation was starting. And he said he didn't even see his eyes the entire presentation because his face was down and he was writing notes so feverishly. This is a guy who is probably worth $500 million in real estate investments and has written the most sold book ever in the history of personal finance. He's the guru of guru when it comes to real estate investing. And he's 30 minutes early and he has his head down taking pages and pages of notes. The man is a student of the game when he doesn't need to be a student of the game anymore. It's just in his DNA.
Definitely. Yeah. Being a student, a long-term student it's a major key to success. There's also a humbleness, extreme humbleness in that will allow you to not get blindsided. Being arrogant can close off your mind to different opportunities. And we've all learned so much from Kiyosaki. Rich Dad, Poor Dad, cash flow quadrants. He's been just a blessing to the game, I think, for a lot of us, for financial freedom. Yeah.
Changed my life. I've talked about it many times on the podcast, so couldn't agree with you more. I want to get to the BRRRR strategy. I want to leave plenty of time for that, but I have kind of a follow-up question on my previous question as it relates to the fear that I see being elevated. And I really think it's the narrative in the mainstream media around the real estate market's about to crash. The real estate market's about to crash. The real estate market's about to crash. But while I hear that from the mainstream media, I read reports like the one I'm gonna mention here in just a minute. This came from Housing Wire. Housing Wire recently wrote an article, I'm staring at it here on my screen, where they said that institutional investors have secured a record $8 billion in funding secured by single-family residential homes so far in 2022. So that means they're on pace to do 16, 17 billion in residential purchases. And listen to a few of these numbers. Progress Residential, a single-family platform, recently unveiled its 5th securitization deal of the year. A single-family loan transaction secured by 2,273 income-producing single-family homes. There's another one here. He mentions First Key Homes, securitized a financing deal worth 1.4 billion, secured by a pool of 3,882 income-producing single-family homes. So you have all this narrative from the media that there's a housing market crash, and then you have billions of dollars of Wall Street money funding institutional acquisitions of thousands of single-family residential homes. And it makes me ask the question, what don't we know? When the smart money's moving in like that, what don't we know? So I'm just curious your perspective around that.
I think the media speaks to what they view as the true consumer, which is just you're moving into a house to live there. So when you're just moving in to live somewhere, then rates, that's a big impact on your bottom line, especially in a recession. So they put out that to the masses, because even though you're talking about the institutional players, it's still only the investors only make up 1/5 of the market. So they're speaking to the 4/5 because that's how you're going to get the ratings, right? The 1/5 of the investors, they're looking at cap rates. They're looking at compression all over the place. And there are a lot of people I talk to that are like commercial investors. And they're like, Brian, why don't you do commercial? Aren't you going to graduate to commercial? And I'm like, well, the main thing is to keep the main thing the main thing. I'm here. I'm tapped into my thing. You do your thing. But a lot of these commercial players will also come and say, it's taken me 2 years to turn a deal. How much time does it take you? I could do 20 in a quarter. I could do more in a quarter if I scale that up, and maybe get another warehouse or do some different things. And that's like blows them away. So, I think the institutions are seeing the opportunity in residential real estate because they're looking globally and they're understanding that there are renter nations out there. There are places like London, Japan. These are renter nations, which means the investors own almost all of the real estate and everybody's a renter. And America is becoming a renter's nation. If you start looking at the statistics, I was pulling up statistics last year that showed like places in New York City where it was 80% investor owned. Wow. 80% of the people in, for instance, in like the Bronx, 80% of the people in the Bronx are renters, or thereabout. And it fluctuates at times. There are parts of LA, California, where 60 to 80% of the people rent within major cities in California. So when you start to follow these statistics, the Midwest is a bit bigger, but this is where the investors are buying. They're trying to turn the Midwest into a renter pocket. And ultimately, if you go out 30 or 40 years, potentially we're a renter's nation as well. So there's a big trend there. And that's why the people are buying, because real estate is stable. I mean, big money is doing it because it gives you a hedge against what the market's doing. Cash flow doesn't care about interest rates. That's for new deals that you're doing today. If you locked up like these guys did 8,000 deals over the last 10 years, they don't care what rates are doing right now because the cash flow is pretty stable. Yep. And the mortgage is fixed. So it's just a great investment. That's why big money does it. That's why they're in single family. It's quick to turn. It's easy to scale. There's less competition in commercial, better cap rates, more flexibility, and you can capitalize on market drama, and you can scale up with today's technology to do it at a different level, do it in town, out of town. I mean, it's just my brother asked me the other day, Brian, there's got to be something else we can do, right? Like there's got to be other franchises, vending machines, laundromats, fast food joints. Like, what else can we be doing with our money? There's got to be something better, right? And I'm like, I can't think. If I could think of something that could pay you cash flow while it's giving you tax write-offs and deductions, ghost depreciation, while it's appreciating, I would be doing it. But I just can't come up with another investment that pays you in those three ways, and that is that powerful. I can't. And I've looked at a lot of stuff. So no, and in fact, vending machines, fast food joints, and laundromats, that is real estate, because it's all based upon where it's physically located. That is going to determine the cash flow. So it all is real estate anyway. So real estate for the win.
Well, and the proof's in the pudding, Brian. I mean, if you just look at asset classes around the world this year, stock market's down roughly 25% when we look at the S&P. Cryptocurrency's down roughly 70%. Cash, the value of your cash, the number on your bank account statement still says the same amount. Hopefully it says a little more, but the value, the purchasing power of that money is down. If you believe the government's inflation reports, it's down, whatever, 8.6, 8.3%. If you look at just the cost of energy, food, housing, and medical, it's up 25%. Those things are up 25%. So I'd argue that your purchasing power, your value of your cash, is down somewhere between the official number of 8.3 and the real life number, what we're spending our money on, 25%. So if you compare that to how real estate's doing, I don't know about you, Brian, but my cash flow on my properties has all gone up this year.
Definitely.
My amortization on my loan balances has all gone down this year, meaning I owe less this year. My depreciation is still intact. My values are probably up 9% in the first 6 months. So we start to see a little bit of an economic shakeout, and real estate very quickly is showing itself as the leader asset class.
Yeah, I mean, it's just a great asset class. I think as a business model, it's also very simple, right? It's been around since the beginning of time. It's something that the average person can get into. And speaking on that quickly, my scariest deal, people ask me that. You've done 300 full gut renovations. I've seen everything from burnouts to tear downs to ground ups to, the biggest horror story shells you can imagine, with structural issues, the property's leaning this way. What was your scariest deal, Brian? And I tell them, my turnkey FHA deal, my first deal, which all I did was paint the walls, sweep the floors, and hand over the keys, was my most horrifying deal. And everybody laughs. But the moral of that is, when you're just getting started, and I probably knew maybe 1% of what I know today, maybe less than that. You're just horrified because you're imagining these different scenarios in your head. What could go wrong? My biggest fears were the house is going to catch on fire or it's just going to blow over and I'm not going to know what to do. And with an imagined fear, there's nothing you can do about it. You can't take action. You can't address it because it's imaginary. It doesn't exist. When you're really dealing with a real estate problem in real life, it's a lot less scary. You can get through it. You can take action steps. You can get to the other side, and then it builds confidence. But just know if you're thinking about getting started, but you're afraid, that means you have a pulse. That's a good thing. That means you're smart, because we were all afraid and we all laugh at how scared we were of our easiest deal, because we were all probably the most horrified on our easiest deal. And then now you look at a shell, oh, it's burnout, no problem, let's go. It doesn't even keep you up at night. It doesn't matter. So it's just a funny thing to look back at.
There's a lot of wisdom there. Tim Ferriss has a fear setting exercise. So if anybody's hung up on what Brian just said, like, oh man, that's me. I'm so fearful. I can't get in the game. I read all the books. I've listened to all the podcasts. I can't pull the trigger. Tim Ferriss, you could just Google Tim Ferriss fear setting exercise. And Tim has this process where he takes a sheet of paper and he writes out, all right, what's the worst case scenario? What's the best case scenario? What's the likelihood of each of these things? And if the worst case scenario came to fruition, how could I pivot? What could I come up with a plan B that would get me out of the worst case scenario? There's a little more detail to it than that, but there's actually a form he created for that fear setting exercise. So whether it's a new job, whether it's an investment, I find that a really insightful exercise to take myself through to help myself go, okay, that's the worst case. And if the worst case happens, I'm pulling lever A, and then I got lever B behind that. Can I deal with lever A and lever B? Yep. Okay, cool. I'm going to do the deal. So that's a really, really good insight there.
No, definitely. And another thing to look at to make yourself less afraid of real estate is compare it to, the path you're walking now. Look out 20 years and see where you're going to be if you keep doing what you're doing now. And if real estate doesn't work for you, what's the alternative? And how scary does that look? Are you going to be able to retire? Are you going to be able to ever have financial freedom, do what you want to do? And when you become more afraid, like I did, I became more afraid of not taking my chance. I didn't even care if I failed. Like, God's honest truth, I did not even care if I failed. I said, I'll be fine. I will be fine failing. I will not be fine just walking this path and pretending to be somebody that I'm not. I am the person that bets on myself. So when you become more afraid of that, real estate starts looking a whole lot less scary. Even a failure, you can take the lessons, the portable equity, and apply it to the next deal and win big on that deal and cover those mistakes. And that's usually what happens to a lot of us school of hard knock guys. Right. We get burned for money. We make big mistakes, but those mistakes wake us up and we recover, and then we go, well beyond that.
Yep. And that's the beauty of making mistakes early in our real estate career, because we tend to make smaller mistakes. And you said something earlier, something to the effect of, and you said it differently, it's not timing the market, it's time in the real estate market. How did you say it?
Yeah. Don't wait to buy real estate, buy the real estate and wait. That's what you got to do, because nobody times the market. If you're trying to be a market timer, 80 to 90% of people buy at the top and sell at the bottom. That is just human nature, fear and greed. And if you're not like a day trader and you haven't played with that fear and greed and really understood it, you're going to make a mistake there. Your best bet is to buy the real estate and wait. Don't wait to buy real estate. There's no good time or bad time. There are just good strategies depending on the time. So study, get with a mentor, somebody who can break things down for you, and get in the game. You won't regret it, because you're going to learn so much. Like Josh said, even if you make a mistake, it's going to be so small. If you just do a small single family deal, just get in, you're going to learn $1 million lessons from that small deal that you can apply to multi-million-dollar deals in the future. So your future self will thank you for getting off of the sideline and betting on yourself, because why not? You're betting on your boss every day. You stay locked into that 9 to 5 that you hate, working for the boss you probably don't like. You're betting on them. Bet on you. It's okay to fail. In reality, there are no failures. There are only lessons. There's only winning and learning. There is no failure in reality when you truly start to understand it. There's winning and learning. Did you learn something or did you win today? Sometimes it's better to learn than to win, because when you win, you usually don't learn anything. So, you just got to stay tapped in. You really got to stay tapped in.
Super well said, Brian. Super well said. All right, man, this has been so valuable. I want to get into BRRRR. So BRRRR, for anybody who doesn't know, buy, rehab, rent, refinance, repeat. And this is something that, you mentioned is one of your strategies, but you've done over 300 of these. Tell us how you got into this model. Tell us what we need to know. What wisdom can you share with us?
I got inspired by a guy who came from kind of a C-class neighborhood in Philly, like I did. And he had a YouTube channel way back when. And he's like wearing sunglasses. He's, dressed real fresh. And he's going into sheriff sale deals that he's never seen before. Somebody's following with a camera. He walks in, and the second floor is like in the basement, like the roof's in the basement. Things just caves in. And he's like, no problem, let's knock it out. He's blowing the back of houses off, blowing the bricks off of these row homes and shells, framing them all the way back up with a Brazilian crew. And I'm just like, I was so mesmerized by his confidence that I knew if I could have that confidence, just that confidence, I could become a millionaire in this game. So I knew I had to get into full gut. So I partnered up with somebody. We bought 3 shells on a like burnout block, like just a mostly vacant block in a C-class neighborhood, right in my backyard, same neighborhood I grew up in. And one was a tear down, one was a burnout, and one was a shell. And we started full gut renovating this. We hired a contractor, the cheapest guy we could find, right? And what did he do? He ran off with 40 grand, because that's what the cheap guys do. And that's part of the contractor's game. I have a YouTube video on the contractor's game. Everybody has to learn it so that you don't get burned. But he ran off, and then it's light bulb. We got to get serious. I have to start to learn how to build these myself, how to control labor myself, how to buy materials myself. So I started to go through this process, and ultimately scaling into the BRRRR strategy, my goal was to always to find the cheapest properties that I could get. So I'm buying them off the sheriff sale, the auctions. I'm buying them off MLS too, if I can get them really cheap. I want shells that have what I call a developer spread. So as I'm getting it more advanced, what's a developer spread? Well, if I could buy it for 50 grand and it's worth 250 of an after repair value when I'm done with it, I have a $200,000 spread. So this is room where I can build into that deal. So now I need to learn how to cut my costs down. And how do you cut down your costs? You cut out middlemen. So you become the GC. You start paying labor and materials directly. You need to know how long it takes to put things together, how much it costs, what materials are needed. And once you have that general knowledge and then the resources, the different teammates, you can then start to put properties back together at cost. And when you cut out that 30-40% GC markup and then start to scale with hard money and different lenders and cut down your materials costs because of volume and get a dump truck and get a warehouse, you can now start to do things like buy a shell for 30 grand, put 100 grand into it. It's worth 250 when you're done with it. And then you can go to you can do that with a hard money lender that'll give you 100% of the money to acquire and rehab the property. So it gave me the 130. Now I go to the credit union, tell them, hey, I have this property. I put a Section 8 tenant in it. It's cash flowing. It's worth 250. They give me 80% of that at sometimes 75 to 80%. So they're going to give me 200,000. I'm going to pay off the hard money lender their 130, and I'm going to pocket, let's say after closing costs and some friction, maybe about $50,000 of tax-free income that I can put in my pocket and recycle my capital and do this over and over again. Now your question is, how can I go out and do 10 of these a year? How can I go out and do 20 of these a year? In 2019, I did 153 of these within that year before COVID hit and started to kind of slow things down a bit. But this is the BRRRR strategy, and these are the iterations you go through. First, getting started, getting inspired, and then learning, which could involve hard knocks right now. I provide mentorship so people don't have to get burned for 40K. You could just learn from my $500,000 of mistakes, but you learn and then you continue to scale to a level with lenders and different people in place so that you can cut down your costs so you can build what I call getting paid to build. So I get paid to build rental properties in C-class neighborhoods to eliminate blight and create value for underserved communities, put money on the table for contractors who feed their families with that money. It's a mission-based thing that I do. I could flip houses in the nice part of the city, but this is part of my mission. And, another part of my mission is building other developers and other people who can go out and do this and repair their communities, their neighborhoods, because I can't do it alone. I did 300 in a decade. That's a drop in the bucket in $1 trillion market. So I need 100, 1,000 other developers doing this next to me. There's no competition. There's unlimited supply. These cities were built in 1915. They're 100 years old. All of these properties, they're falling apart. They need you to get this knowledge and go out and rehab these communities. That's the only thing that's going to make a difference.
Thanks for sharing the mission there. That was really kind of insightful why you picked those neighborhoods and how you're employing people in those neighborhoods and helping them put food on the table by making a real change in the community that they live in. That's a beautiful mission. So thanks for sharing that. The other thing you said, actually, one thing you mentioned a YouTube video. Colin, our tech guru, was Googling it, couldn't find it. So if you know the name of that, will you drop it in the chat for us? Because I want to share that YouTube video with all of our listeners.
Yeah, the contractor game. Yeah,
contractor game.
Let me drop that in. It's a funny. I mean, it's not a funny game when you're on the other side of it, but once you learn it, no one will be able to run off with your money. You'll be able to pick it up immediately. And it's something that we all have to learn.
It's got to be one of the most important lessons in the whole game of buying and rehabbing properties, and it doesn't matter if it's residential, commercial, whatever. The other thing you said, Brian, was you had this methodology of figuring out did you call it your contractor margin?
Yeah, the profit spread. So my developer spread. Yeah. Mm-hmm.
So we used to do the same thing. When I got started with my own house, turning that into a rental property, sold it a couple years later. So I escaped taxes on that, moved. I think my first home, I moved something like $83,000 into my next investment property. And I'm sitting there as a 22-year-old kid. And I'm like, do you know how long it would take me to save $83,000 in cash after taxes? Like, that would have taken me, at the time, I think I figured it would have taken like 6.5 years to save that much money. And then I thought to myself, would I ever have the discipline to do that? And then I realized no, because I'd end up in Vegas or Hawaii, and my dumbass would have spent all, some of that money over the 6 years. So I realized at that moment that moving that money tax-free was incredible. And then we used to have this formula, Brian, where we didn't care what the asking price of the home was. Now, this was a different market than we see today. We might be going into a softening market. We figured that we needed to make 100 offers to get one accepted. And the way we would figure out what to offer was we'd say, okay, one, it's done. What's it going to be worth? Okay, it's going to be worth $135,000. How much is it going to cost to do the renovations? It's going to cost $30,000. Plus, I'm going to give myself a 20% margin of error. Let's say it's $35,000. How much money do I want to make? The minimum amount of money I'm willing to make on this project based on the amount of time and energy and what I'm going to do is $7,000. Okay, cool. This becomes simple math. 135 minus the 30,000 renovation, minus my 5,000 margin of error, minus the $7,000 I want to make in profit. That tells me exactly how much I can offer on that property. And if they won't take it, well, tough. Now, it might be a little more complicated in a market that's moving up 20% a year now, but having some sort of a foundation or formula you can follow is crucial to your success.
It's everything. And my formula probably sounds like it just overly simplistic, like, oh, he's just looking for a shell. But you have to realize I'm so low to the ground. A shell, let's talk about a shell. and a row home, because I'm in row home cities, Baltimore, Philly, parts of Cleveland, New York, parts of Jersey, Boston. These are row homes. So like townhomes where the houses are connected. These are like real life Legos, we'll call them. The shape of the house is the same. If you did 100 of these deals, you could do 1,000 of them with your eyes closed, because they're the same in terms of the general construction. The cost of the bricks, we're talking inherent value of a shell. The cost of the bricks being tapped into the utility lines and just having the main structure is probably today north of $100,000. If you tried to go out and just build a 3-story or a 2-story townhome shell, it's going to cost you that much. So if you can grab it for $30K, the inherent value difference is $70,000. You're already making money on the purchase there. Once you have the knowledge of how to repair the interior, put in new windows, refresh the roof, and just tighten that property, you can get that down to a science to say, well, that's going to cost me around 120,000. So you can now have this simplistic view of, well, if the ARV, I'm just looking at after repair values now. If the after repair value is 250 and I can get it for 10, 20, 30 cents on the dollar, I'm going to make money. So you start putting it into your pipeline, and you get lenders that will believe in you and your mission. And how the lenders think is they're all about deploying money. Lenders don't make money unless they give it to you and you invest it, right? They're in the business of doling out money. So once they believe in the mission, they're going to give you $500,000, go invest that. You bring that back, refinance them out, they're going to give you 2 million. You do that, they're going to give you 10. You do that, you're going to be talking to JP Morgan, because they're going to be having a conversation about how can you deploy 100 million, every 6 months, because we want to collateralize that, sell that off to the capital markets, and it ends up in some big land trusts like Redwood Trust, and it's in somebody's 401k, and they're doing it every 6 months. So you can easily become a player. I think the top 5% of residential real estate players only do 10 or more deals a year. So once you can scale over that level, you become a national player, and you can start having concessions made for you. Like they'll use your appraiser on the front and the back end of the deal, and that will eliminate pretty much, I would say 90% of the risk in the BRRRR strategy is really appraisal risk. So you can start to eliminate risk from your model and then scale this thing to the next level. And that's how you can get that warehouse and start to cut your costs down 30, 40% on materials, and just keep going and do as much volume as you can.
Gold. Talk to me about your first private money lender, Brian. And I know we're running close on time here, but I'm going to milk this conversation to the last second.
This guy's great. And I love talking about this guy. So I'm knee deep in these shells, right? This guy's just run away with 40 grand. I'm figuring it out. I'm pulling money out of everywhere, cashing out IRAs, 401ks. I'm just going all in on this thing. And I get my first 3 deals done on this block, and we refinance out. We go out and buy another 3 on this block, because now we're into the block, and it's like, well, let's just do the whole thing. I ended up doing 11 deals on this one block, which was amazing to control, a block like that. So I'm 3 deals into the next 3 shells that are connected to some of my other shells, and we're like out of money. Like it's over. It's curtain calls time. I find a community-based lender. They called themselves Germantown Jumpstart, and they were focused just in the neighborhood that I kind of grew up in. So I found them through other developers I knew, and the owner comes out, and this guy, he owns like a lot of commercial real estate. So he likes the residential real estate built up around his commercial real estate. So he sold a bank, and his ownership stake in a bank, and he had a ton of money. So he's lending it out at like 6% on hard money, and like a point and a half, which isn't just unheard of. He's undercutting the market. Yeah. So he comes out, and I'm like, all right, we're going to walk the properties. What's going on? I thought I loved real estate. This guy's he's like 58. He's got his hard hat on, his boots on, and he's walking through the shell. Like we're like balancing on beams. Like this thing's going to cave in, and he's just head first in the shell. I'm like, man, this guy's going after it. We walk around the property. We're on the block. There's drug dealers here. There's this, that. And he's just like unfazed, because real developers, we see the future. We
Oh,
don't see what's here. We don't care about what's here. We see the end game, which you can't see if you're not us. So it's, people are like, well, why would you invest in that neighborhood? Because I'm not even looking at this neighborhood. I'm looking at what it's supposed to be and what it's going to be. And that, the people who have that vision make the millions because they get in early enough. And we walk around it, and he's just like, everything looks good. You know, we'll give you $250,000. We'll have the money in your account on Wednesday. I'm like, Ken, it's Monday. He's like, yeah, we're done. And I'm just like, wow, this is amazing. So that was like my first like hard money. But he came at a time where I'm just like, we're done. And this guy comes in on a freaking golden horse and just like saves the day. And without that, I would have never gotten to 300, right? So that's why I love talking about this story, because it only takes one person to believe in your mission and one like-minded investor or lender to come in to completely transform things for you. And Ken Weinstein was that guy. And it was just a powerful time when that Germantown Jumpstart program came in. So I always love speaking about it and telling that story, because it was just mind-boggling to me. Like, you need the money and you're like, where's it going to come from? And it came through. Yeah.
The idea around OPM, other people's money, is so powerful. And when you're starting in that game, I, like you, got to a place where I was like, man, I've got bigger dreams and bigger projects than I do pockets. And it felt like this unsurmountable obstacle. And similarly to you, somebody who was older than me, who didn't want to do all the work, didn't want to do all the vision of the future, but they saw that we had a history of doing deals successfully. And they said, you know, if you could just give me 6 or 7% or 8%, I'd be really happy with that. And just, you know, give me a lien on the property, make sure I'm collateralized, do me right. And I was like, oh my gosh, I thought, you know, like my whole world changed because I realized the philosophy of OPM. And there's more people out there with money that don't know what to do with it, don't want to put it in the bond market. Oh, I forgot to mention earlier, the bond market's gotten slaughtered this year. So everybody who thought the bond market was safe, yep, not so good. They don't want to, they're fearful to put money in the bond market. They're fearful to put money in the stock market. They're not buying cryptocurrencies, but they know that the value of their dollar is getting eroded. And if you can show them a model and how you can deploy capital, create change and positive impact on a house or a community, boy, you can solve a lot of problems with that knowledge.
Yeah, and that's what people have to realize. We all get caught up in our own money. Like, oh, I don't have the money to get in real estate, so I'm going to sit on the sidelines. It's not the money. I tell people this all the time. There's two things in real estate. There's money and knowledge. The more you have of one, the less you need of the other. So if you're running around with $2 million, you don't need much knowledge. Go get burned for 40 grand by a contractor and figure it out, and you'll be fine. If you have no money, you need more knowledge. You need more mentorship, because you can't afford to make those costly mistakes. But those are the two things that you absolutely need one of. And if you have less of one, you need more of the other in order to be successful. So, you know, you're 100% right. If you come in with the knowledge, with the business plan, with the model, the money is going to flow to it, because smart money moves towards opportunities like mortgage-backed security. I mean, mortgage-backed security is it's everything. And especially when you're getting into the hard money space, where you can be charging 10, 12, 13%, 6, 8, 7, 9% or whatever. It's a great return. That is, it's not riskless, but it's very low risk when you're talking about only lending up to 65% of the after repair value. It's a very reasonable bet that if we're staying below this, we're trusting the appraised value, and it's a mortgage-backed security. So if the deal goes bad, we're just going to liquidate it to another investor. I mean, it's a safe investment for people. And once you figure that out, you can go out and raise money, but you need the knowledge. You can't raise money without knowledge. So that just means you need to go get mentorship and go get knowledge.
So much wisdom here. Such a great conversation, Brian. I'm 100% certain that our listeners are going to want to know how to follow you, how to learn from you, about your coaching programs in 24/7 University. So where can people find you, Brian?
So you can find me on YouTube, Brian Loves Cash Flow, and it's easy to remember because I do love cash flow. So Brian Loves Cash Flow on YouTube. On if you're on Instagram, Brian Grimes _247 Cash Flow University. If you're on Facebook, just Brian Grimes, you'll find me. You can Google Brian Grimes 24/7 Cash Flow University. And if you want to tap directly into one of my free trainings, I put together some really cool free trainings for you guys, and access to my 24/7 Cash Flow playbook, which will teach you like step by step how to go from where you're at to building financial freedom with this BRRRR strategy and with cash flow at www.workwithgrimes.com/cash flow. workwithgrimes.com/cash flow. So those are the easiest places to find me. And no matter where you find me, everything's backlinked. So you can tap into the free training. You can text me. We can hop on a call one-on-one and talk about, the mentorship program and how we can get you some deals done. Some of our students are in the country. We have people out of the country that we're building deals for. In the US, we'll build properties for you. We'll tap you in. We'll hand off the connections. I'm not one, hopefully you can tell, that holds back information. I don't believe that there's competition at a level where anybody in real estate needs to really hold back info. So I'm here to give you the game, give you the goods, the good, bad, and the ugly, and make sure that you're not getting burned for money out here. So, that's my job.
Brian, I feel like we just scratched the surface. I hope people will follow you and learn from you. And I'm really connected and just want to compliment you on your mission. I heard you say, I need 100 or hundreds of developers out there across the country that are willing to invest in these neighborhoods and renew these neighborhoods and bring new life into them. And that's just a beautiful mission of trying to improve communities across the country. So thank you for being the man that you are.
No, thank you. And I mean, I want, that I'm not going to stop until I have 1,000 of me running around in all the C-class neighborhoods across the country, rebuilding them until they look like the B and A-class neighborhoods. So, that's the mission. I'm sticking to it. The main thing is going to be the main thing.
I love it, man. Thanks for your time today. Thanks for being on the podcast.
Thanks, Josh. Really appreciate it.